Dr. James J.C. Cooley. That's right. Let's go. It's the James Cooley Show. It's your life. Dr. James J.C. Cooley. All right.
The James Cooley Show, It's Your Life, can be heard every Sunday at 9 p.m. right here on The Answer San Diego. Life is full of circles, cycles, phases, and stages. It's your choice to ignore or embrace them. Motivational speaker, author, military veteran, and founder of the J.C. Cooley Foundation, James Cooley, and his guest will inspire and equip you to strive for your own greatness and overcome adversities. Listen to The James Cooley Show, It's Your Life, every Sunday at 9 p.m. right here on The Answer San Diego.
The James Cooley Show, It's Your Life, can be heard every Sunday at 6 p.m. right here on 660 AM The Answer in Dallas-Fort Worth. Life is full of circles, cycles, phases, and stages. It's your choice to ignore them or embrace them. Motivational speaker, author, military veteran, and founder of the J.C. Cooley Foundation, James Cooley, and his guests will inspire and equip you to strive for your own greatness and overcome adversities. Listen to The James Cooley Show, It's Your Life, every Sunday at 6 p.m. right here on 660 AM The Answer in Dallas-Fort Worth.
The James Cooley Show, It's Your Life, can be heard every Sunday at 6 p.m. right here on The Answer. Life is full of circles, cycles, phases, and stages. It's your choice to ignore or embrace them. Motivational speaker, author, military veteran, and founder of the J.C. Cooley Foundation, James Cooley and his guests will inspire and equip you to strive for your own greatness and overcome adversities. Listen to The James Cooley Show, It's Your Life, every Sunday at 6 p.m. right here on The Answer.
Yeah. Dr. James J.C. Cooley. The James Cooley Show. It's your life. Yeah.
Hello, welcome to the James Cooley Show, It's Your Life. I'm your host, Dr. James J.C. Cooley. And wow, we got an absolutely fantastic guest coming on today. And we're going to talk about market volatility and long-term investments and what do you do. I mean, a lot of people are panicking right now with what's going on in our country with the president putting tariffs on everybody in the world. It's driving up everything, plus the stock market is almost fell to the bottom just because of the actions of this president. And many people that were planning on retiring, I mean, if they were planning on retiring, they probably can't do that now because most of their retirement has been wiped out. So it's a tough one. But we got a guy on today, Joshua Goldsmith. He's going to talk us through a lot of things about what his thoughts are. And this guy is absolutely fantastic. He is my financial advisor for the people out there that's listening right now. So we're going to have a sit-down conversation with Joshua Goldsmith, certified financial planner, professional, financial consultant, and owner of Goldsmith Financial. He's going to talk about the volatility of the price of admission. A couple other things we're going to talk about is emotions is the enemy of good decision. So we're going to talk about a whole lot of things. And I tell you what, I want to bring him on the show right now because we got a lot to talk about today. How you doing? How you doing, my friend?
I'm doing great. How are you, JC? It's so good to be back.
Yeah, it's great being back. And we haven't talked about the markets. We haven't seen it like this in about not in the last 4 years. So
pretty interesting here. Pretty interesting. We did have a decline in 2022 that was bigger than this, but we are where we're at right now, and there's a lot of people out there likely that are holding on to the seat of their chair. If they have a good advisor, they're probably not worried.
You said 2022. I think it was 2020.
2020 was, yes. 2020
yes.
was the COVID, right? The COVID
Yes.
took about 15 months to recover on that one. And then here today, now we sit at about 12%. The S&P is down 8.3% year to date, but over 12% from the latest high that we marked. Whereas the NASDAQ is down 12.2%, or I'm sorry, 24% from the most recent high. So the NASDAQ is the tech heavy index that everybody remembers, and the S&P is just a more generalized, broader index.
So Josh, what typically causes a short-term market volatility?
Great question. And, we're experiencing it. Something like a tariff war that could certainly cause short-term volatility, having impact on people, on consumer spending. If the price of goods are raised on imports, it puts a higher strain on consumer spending, and that's a direct impact. If interest rates were to also increase over this period of time, it would be a double strain. So if the Fed gets together and they've signaled that they are looking at lowering interest rates, bringing down interest rates, but having tariffs, they'll kind of cancel out each other. They're trying to stimulate the economy, and then tariffs are a strain on it. So it's kind of like hitting the gas pedal and the brake at the same time. So at least they're not looking at increasing interest rates right now, which I think would be a bad move.
How should investors interpret a 5 to 10% drop?
Well, it's a 5 to 10% drop is pretty normal. In fact, we experience about a 10% drop almost every year, and that should be something that investors are pretty used to. Someone that has 5 to 8 years of investing experience has seen it. It's called a correction. We're still in a correction until we are 20% down from our most recent high. We call it a correction. After that, if we go 21% down for the most recent high on the S&P 500, it's called a bear market. Technical terms, it's not really relevant other than just to talk about what type of environment we're in. But as far as consumer spending, are we going into a recession? Where are interest rates going? What impact do tariffs have? What are the short-term considerations when I'm a long-term investor? I'm 62 years old. I'm looking at retiring in 5 years. And I just saw a 15% decline in my investments. Where does that type of investor stand? Well, they shouldn't be panicking either. They're long-term investors looking at a lifetime of saving, or maybe they just started saving 15 years prior. Maybe they got a late start on it. You got to be comfortable in your own skin, JC. So in other words, if you set up a portfolio, if I set up a portfolio for you, we determine that your risk tolerance is growth. Well, a good advisor will say, "How do you feel? How would you feel if your portfolio declined 20% in less than 12 months? Would you be panicking? Because that's a very real possibility for people that are invested in a growth type of portfolio, and that's actually what we're seeing now."
Well, I mean, many are panicking. I'm concerned, but many are panicking right now. So are there patterns to volatility that history can teach us?
There are absolutely. If we look at on an annual basis, I mentioned that the markets typically decline about one correction every year or two on average over the last 50 years. That's market volatility, right? We saw tariffs imposed, and then we saw a break on those tariffs for 90 days. So once the tariffs were imposed on quote unquote Liberation Day, the markets had declined for about 5 or 6 sessions straight. When it was announced that there was going to be a 90-day moratorium on that, the markets increased 10% in a day, which is the third largest gain in history. I believe it's ridiculous. So it's pretty dramatic what's going on and what you see. But it's also important to note, hey, the market's declined over 5 sessions. It recovered half of all of the decline that it had from its most recent high in 1 session. So if people are panicking, and let's say they sold out in session number 4 after it was announced, after Liberation Day, after the tariffs were announced, by the way, I hate that name on Liberation Day. I mean, it sounds like we're talking about, Normandy or something like that. True Liberation Day. Tariffs aren't liberation. Tariffs, should be called, our tariff war day or whatever. But if they were to sell out after 4 sessions, right before it was announced that there's a moratorium on that 90-day moratorium on tariffs, when the market increased by 10%, well, now they missed out on that increase. So it further solidifies a case for a buy and hold strategy, because nobody can time the market, not even the most seasoned investors. It's a very, very difficult thing to do.
And you're absolutely right. I mean, people should be taking advantage. I mean, at least I did when it dropped. Didn't want it to drop, but you mentioned Liberation Day, and then the next day, the president added more tariffs,
right?
And the market dropped again, and it haven't came back up since then.
Right.
What's your thoughts?
We've almost given up all of the gains from that one day of recovery. We're not quite there yet, right? We're not that low, but we could retest our prior low that we experienced a couple of weeks ago. It is a possibility, and investors should be prepared for that. But I get calls sometimes, hey, the market's volatile. What do we suggest we do? There is a proactive approach, is preparing yourself emotionally, making sure that you're comfortable in the investment portfolio that has been selected for you or that you've chosen, and know the possibilities of how low it can go. Stay informed. Knowledge is power. But at Goldsmith Financial, we buy quality, we diversify, and we buy and hold. And that trifecta has made me very successful for the last 12, 13
Hold that thought. I want to talk about that trifecta when we get back. We got to take a station break. If you want to be part of this absolutely fantastic conversation, all you have to do is go to the comments on the platform that you're watching us on and ask any question that you might have. I promise you we'll get you an answer. It's your life. And we'll see you shortly after the break.
Doctor James JC Cooley. The James Cooley Show. It's your life.
Welcome to Viridian Christian University, where faith and learning come together to transform lives. At VCU, we believe that education is more than just academics. It's about fostering a community of growth, integrity, and purpose. Whether you're pursuing a bachelor's, master's, or doctorate, VCU offers flexible, affordable, and 100% online degree programs that cater to your busy life. Our innovative platform provides a personalized learning experience, empowering you to thrive in today's ever-evolving world. Join a global community of learners guided by an experienced faculty who are committed to your success. With VCU, you're not just earning a degree, you're preparing for a future that integrates faith, leadership, and service. Viridian Christian University, educating with purpose, transforming lives. Learn more at ViridianChristianUniversity.com. ViridianChristianUniversity.com.
Life is filled with circles and cycles, phases and stages that shape who we are. These moments define us, and we have the choice to either accept or embrace them. Hello, I'm Dr. Michelle Cooley, and I encourage you to support the J.C. Cooley Scholarship You Can Award so we can empower high school seniors and college students to believe that they can achieve anything they set their minds to.
Hello, I'm Dr. James J.C. Cooley, the host of It's Your Life Radio and also founder of the J.C. Cooley Foundation. With your help through donations to this year's J.C. Cooley Foundation Scholarship Award, we aim to inspire, prepare the next generation of leaders. We kindly ask for your generous support to help bless at least 30 or more future leaders by donating between a minimum of $250 or more. Please consider donating what you can by May 1st and join us in shaping our future leaders of tomorrow. Hello, welcome back to the James Cooley Show. It's your life, and just like Josh Goldsmith, the owner of Goldsmith Financial, certified financial planner, and so many other things, kind of giving us insight on the market, because a lot of people are panicking with the things that is coming out the administration, that driving up price, driving up costs. Where many that are living from paycheck to paycheck that probably won't be able to live from paycheck to paycheck anymore, because the cost of goods and cost of everything has skyrocketed. So we're talking about market volatility versus long-term investment. What do you do? I mean, so what Josh is explaining that, and right before we got off the air, he was talking about the trifecta for what Goldsmith Financial does. Josh, can you pick it up?
Absolutely. Thank you. So Goldsmith Financial, the trifecta, what I was talking about, buy quality, diversify, and buy and hold. Those are the three pillars of what I built my career on. Number one, quality investments. What type of investments do you own? In consideration of the diverse background of investments and selection of investments that there are out there, you can be owning exchange traded funds, you could be owning mutual funds, you could be owning life insurance investment products. There are a myriad of investment styles out there. What I focus on is cherry picking the best ones I can find for my clients in terms of fees, what are the lowest fee structure on it, as well as what is the performance, but also what type of management style do the fund companies employ. So there are a number of different types of fundamental investment styles, all the way to some technical and esoteric investment styles, You have to align that with who you are and create a portfolio for yourself so that it aligns with your own convictions. And so my expertise is matching you up with that. The second pillar, diversify those investments. How do we do that? Well, we're not going to be owning everything in the tech industry. We're not going to be owning everything in the in just growth. Small cap, large cap, mid cap. Let's diversify and own a little bit of each in proportion to our risk style and our risk tolerance, and consider how much time you have. It's important to consider that, because if you're invested for a 10-year span and you're in the middle of this downturn, let's say you're only a couple years in and you're panicking, you've got to look at the bigger picture. Look at the history of the markets. Look at the history of the investments that you're currently in to find out, well, what are the 1, 3, 5, and 10-year returns on these funds that I own? And the third pillar of investment style Goldsmith Financial is to buy and hold those investments. So we're going to buy and hold those until the end of your intended hold time is. And as we get closer, we're going to tighten the portfolio up. We're going to de-risk the portfolio so that, hey, the closer we are to a goal, the less risk we should be taking. But I have to throw one thing in there. One habit in consumer society that we have is taking out debt, which is a block to building wealth. With over $1 trillion in credit card debt in this country, we've got to rethink and reshape the scope of how we make purchases in our own consumerism that takes over our lives oftentimes. Credit cards is a great place to start to take out, which they sent me. Okay, they sent me another credit card, JC, and I save them for your show when they send them to me, because you know what has to happen, right? I mean, is this healthy? Is it healthy to spend this? No, I'm not going to do it, because if I don't have the money in my account today, I'm not going to buy it, and that's put it in a nutshell. So there we go.
Last time you pulled out a big shredder.
No. This time it's just a Chase credit card there.
So you hit on a couple of things as I'm talking about with long-term investors. How can emotional reaction to the market swing harm to these investors? Because a lot of them are reacting immediately. Can you talk about that a little bit?
Well, emotional reaction is a very real risk that you run if you run your own portfolio. Especially, I act as a buffer between clients making a very poor decision and them attaining their goals. So, if they're panicking, I think it comes from a lack of education. That's what I do, because as the market goes down, and I'm invested in the market as well. But as the market goes down, I actually I know it's not representative of necessarily how all my clients are feeling, but I feel my blood pressure goes down, because we were overvalued and the markets. It was pretty much consensus that the markets were overvalued, and now that it's come down about 15%. We're closer to a fair value mark. And also all of those investments are on sale. If you're looking at it as an opportunity, if you're still in your working years and you're making money out there and you have existing investments, but you also have an income, we can be dollar cost averaging and get these lower prices, so that if and when the market were to recover, and the recovery time on average is about 18 months from these sort of declines, you're going to have a cost basis with a 15% discount. And so what that means in layman's terms is you're going to have a nice little profit in there.
What are the risks? I know you talked about this a little bit, of investors, like I said, long-term, whatever, pulling their money out right now because of that.
Mm-hmm. What was the question? What are the long-term risks?
What are the risks of pulling money out during a downturn?
Oh yeah, that's exactly it. If you were to pull your money out, say I'm going to sit this out in cash. Part of the problem with that is you might be right, which is more dangerous than being wrong in this circumstance. And the reason being, let's take that for an example. You pull the market out, you pull your money out of your investments today. Tax consequences set aside, because you could be generating capital gains or capital losses depending on how long ago you invested. But you pull it out today, the market were to continue to decline. Now you feel right. Now you feel like you did something really proactive, and you're feeling really good about yourself. Now the market goes down, let's say another 10% from where we're at. And let's just paint a grim picture. Tariffs are reimposed, and the country goes into a recession, and it bleeds into the housing market. It's a longer than normal recovery. You feel good because you sold out now, but hey, the market went down another 10%. You're not. When are you going to buy back in? Is it going to target? You're going to target a 10% additional decline? Because if that's the case, what investor sentiment, what they feel, there's been studies on this, is that if they are right and the market were to decline after they sell out, they're afraid to get back in. They're not going to get back in. And in fact, they're going to wait till it goes lower. If it could decline 10%, well, I'm going to wait until it goes a little bit lower and a little bit lower and a little bit lower. In the meantime, they're not watching the market on a daily basis or weekly basis, maybe a monthly basis, and the markets start to recover. And they recover, and then all of a sudden it's recovered past the point of where they sold out originally, and they're still not buying back in because they're thinking, hey, this is only a temporary fix here, and it's gonna decline again. Before they know it, the markets at all-time highs again, and they're in the office talking to an advisor saying, how can we fix this?
So
difficult. It's difficult. So
can seasoned investors accurately time the market?
You can get lucky, Have you ever played roulette? They'll be playing Russian roulette if they're trying to time the market, and they're weighing their careers on it. The best type of investment style I've found is fundamental investing, value investing, where you're buying and holding the securities, and we're targeting about a 10% average annual return over a long period of time, like the markets have provided. That's the most I could tell you. I've not seen anybody that's been able to time the market consistently as their job, as their career dependent on it. I mean, we saw people jumping, people jump out of windows in New York City, when they're relying on these kinds of investment tactics, and it's just not for me or my investors.
No, and that's I don't think people can accurately time. You guys know a lot more than, because you deal with it every day, than just common investors. I'm talking about this planning their portfolio, because you never know what's going to happen. I tell you, we're going to take a station break, but we got a lot more Joshua Goldsmith. I tell you what, whichever platform that you're watching this on, whether it's E36 Television, Transfer TV, YouTube, LinkedIn, Facebook, Rumble, and over 84 other platforms, welcome to the show. If you want to be part of this conversation, just go to the comments. The comments of the platform that you're watching us on. Ask any questions that you might have. If you listen to us on the radio, well, I tell you what, just give us a thumbs up. So I tell you, we're going to take a station break, but it's your life, and we'll see you shortly after the break.
Your life. Dr. James J.C. Cooley.
Black Man's Point of View is the newest Amazon.com #1 release and bestseller book from author Dr. James J.C. Cooley, featuring the perspective from 11 other contributing authors. In A Black Man's Point of View, Dr. James Cooley unpacks his thoughts and personal experiences about the challenges, stereotypes, and feelings of self-worth that many black men face today due to a 400-year ancestry rooted in slavery and colonization. Yet, how so many black men move forward despite this history. Most importantly, A Black Man's Point of View conveys that all men, regardless of race, creed, or color, are capable of love, respect, and dignity. Described as a map to a greater life from the heart of a man who's experienced life's misfortune and harsh conditions, James shows us how beliefs, convictions, and a healthy mentality can help propel a life worth living. A must-read for all. Order your copy of A Black Man's Point of View by author Dr. James J.C. Cooley today from Amazon.com or wherever.
Hi, I'm Dr. Michelle Cooley. I've heard so many powerful stories from women who survived heart disease because they took action in time. But I've also heard stories of women who weren't as lucky. The difference? Awareness, access to care, and early intervention. According to the American Heart Association, every 80 seconds, a woman in the United States dies from cardiovascular disease. That's more than one life lost every single minute. But did you know that 80% of heart disease cases are preventable? That's right, 80%. That means small changes like eating healthier, exercising, and managing stress can save lives.
Hi, I'm Dr. James J.C. Cooley, and I'm committed to making sure that more women survive and strive. Please join me in raising funds for the American Heart Association to support life-saving research because every heartbeat is worth fighting for. In honor of Women's History Month, let's spread awareness and help women recognize the warning signs before it's too late. Hello, welcome back to the James Cooley Show. It's your life, and I tell you, that last segment I love, and I played the music, and I just started roboting, and you guys don't know nothing about that, especially Josh. He's too young to know about the robot.
Oh, I know the robot. I grew up in the '80s. Absolutely, come on.
Hey, so I tell you, this is an absolutely fantastic show. And for our viewers out there, come on. I see you watching. I see the numbers over 4,000 right now. That's on Facebook, not Facebook, YouTube alone. And I know you got questions. You're concerned. This man right here can help you out. Any questions that you might have, this is your opportunity. And guess what? He ain't charging today. So right. All you have to do is just go to the platform, go to the comments that's on the platform, ask them any question that you might have. I promise you we'll get you an answer. Josh, so what impacts does missing just a few of the best market days have on returns?
Well, that's a great question. Missing just a few of the best market days in any given year can affect returns significantly over the course of that year, and then the succinct year, the years coming after that. It also goes back to the buy and hold strategy. Keep in mind, you may be sitting on a portfolio that is down 25% right now. If you are, let's say, a 75% individual stock investor and have 25% of your other securities and things like CDs and fixed income products, you still might be experiencing a pretty hefty paper loss on that. And where is the gauge on that? If you're owning quality stocks in a diversified portfolio, where do you look? And really, you've got to look at the S&P 500 as your benchmark for how the markets are doing overall, because that's what it's designed for. That's why it's created. You may be down 25%. The S&P is down 12%. Okay, so you're taking more risk, more beta than the overall markets in general, but you should be used to that, right? Because if you have a portfolio that is invested in that, and by the way, you're panicking, and right now, you're probably not invested appropriately for your risk style. Period. If you're panicking in this decline, you're going to be panicking in the next decline and the decline after that, and it's just not going to be good for you or your family or your emotional, how you feel about your investments moving forward, and it will impact your life in a negative way. So it's so important to be invested, aligned with your risk tolerance, your time horizon. And one of the for all you do-it-yourself investors, I wanted to make a book recommendation. There's The Intelligent Investor by Benjamin Graham. It's a really good book to kind of give yourself a gauge on value investing. Value investing, they're looking for companies that are that have taken a significant downturn in pricing, where you can have an entry point that are undervalued, and holding them for the long term. And the theory is you're going to get a pretty nice return moving forward. But Warren Buffett called this by far the best book on investing ever written. So Benjamin Graham, The Intelligent Investors.
Wow. I might have to get that book, but I got you, Josh, so I don't have to.
You got me. I've read it, and I've read Snowball, which is the thick 1,000-page book that Warren Buffett wrote, and you have all access to my intelligent investing. So absolutely.
So for the people out there panicking right now, what would you tell them,
Josh? Why are they panicking? Ask themselves, why am I panicking right now? What is fundamentally wrong? Is it just because the markets have declined, or is it because maybe they don't have the conviction that they should in their advisor or in the types of investments that they own? Because the markets will decline, and the S&P may recover in its average time frame, but it's not necessarily your investments. You don't own the S&P 500. You can't own it. It's just an index. You own something that is designed to possibly mimic it to a point or beat it, but you don't own the index itself. And so your portfolio, if it's not professionally selected, and if you're taking higher risk in that portfolio, it may not recover when the overall broader markets do. And if that is part of your risk style, fine, you're willing to take that risk for some extra returns. But if it's not, you should probably rethink your investment portfolio style.
Wow. So, Josh, how can dollar cost averaging help mitigate the fear of bad timing?
Sure. So, but dollar cost averaging is the process of investing. So if you came to me with, let's say, $1 million, and you want to invest that $1 million over the next 5 years, for example, in a pretty growth-oriented portfolio, and then we reconsider after 5 years because, say, some retirement's coming up or some major life event happens. We're putting the money, dollar cost averaging says, okay, let's put 100,000, let's put 10% of that portfolio into the market, into your strategy, I should say, over a 10-month period, so that everything doesn't go in today, because if tomorrow the markets were to decline, and go into a prolonged decline, you wouldn't you wouldn't see a faster downside. It potentially offers better downside protection than just dumping all of your money in on one business day.
So building a portfolio for a long-term investor, how does assets allocation play a role in managing volatility?
Sure. So if you look at asset allocation, basically what we're looking at is, do you own everything in the tech sector, or do you own everything in the consumer cyclicals? What we want to do is diversify the account, and so that you have a proper allocation into each sector of the economy. So if banking, for example, were to decline this year, and yet healthcare, on the other hand, the healthcare industry were to surge, you have a little bit of investment in both, so that it kind of like balances the ship, so that we're going down the river of life in not in a canoe, but in a maybe a rowboat or a bigger type of vehicle. So
So how does a long-term high quality portfolio look like? How does it look?
How does a what look?
It says, what does a long-term high quality portfolio look like? I'm talking about if you was an investor that was in it for the long haul, it's I don't think that you would put them all in the same category for as buy, just like you mentioned, tech stocks. You got to own all the tech stocks. Sure. So
it's hard to say, because you have to have so many other factors that go into investing as a financial professional for my clients. So I need to know their age, I need to know their risk tolerance, I need to know their time horizon, I need to know their investment goals, and number one, ahead of all of that, I need to know what's most important to my clients, what's most important to you. And you need to know that for yourself, so that you can invest, if you're doing it on your own, so that you can invest appropriately for yourself. So long term, there are no, you're not from Goldsmith Financial, you're not getting any kind of stock investment portfolios that, hey, this is your risk tolerance and this is what you're going to own, because there are so many other factors. And I've become an expert over the years of getting to know a lot of these. I can't say all of them, but I know a lot of these different types of investments and how they should be allocated, so that we can derive the most satisfaction over the years and use them as a tool. These are tools. Like anything else, you can hurt yourself with it. If you don't know what you're doing, you don't know how to swing a hammer, you're going to hurt yourself, So right now we're being hammered on our head, right? With the markets, but you get the right tool, and you get a piece of rubber helmet, and so that way, when the hammers come down, it comes back and goes the other direction.
A rubber. I ain't never heard of a rubber helmet, but it sounds good. Hey, we're gonna take a station break, but we got another segment with Joshua Goldsmith, and I tell you what, it ain't too late. You want to be part of this conversation? All you have to do is go to the platform that you're watching this on. Go to the comments. Ask any question that you might have. I promise you we'll get you an answer. It's your life, and we'll see you shortly after the break.
It's the James Cooley Show. It's your life. Dr. James J.C. Cooley. Yeah. Come on.
At Viridian Viridian Christian University, we believe education is more than just a degree. It's a pathway to a purpose-driven life. Whether you're advancing your career, pursuing a passion, or building a new future, VCU's 100% online programs give you the flexibility to learn on your terms, anywhere, anytime. With expert faculty, personalized mentorship, and a faith-centered approach, you'll gain the skills, knowledge, and leadership you need to make a lasting impact. VCU offers bachelor's, master's, and doctorate degrees, each designed to empower you for success in today's fast-changing world. Join a global community of believers, learners, and leaders. Ready to start your journey? Viridian Christian University, transforming lives, empowering futures. Visit us at ViridianChristianUniversity.com. That's ViridianChristianUniversity.com.
Really get a chance to know who you are. And once you know who you are, you truly know who you are, love who you are. Love who you are. You're a masterpiece. Love who you are. Love who you were born to be. Love me some me. That's what I'm talking about. When you leave high school, you gotta know today or tomorrow, or hopefully today, what your plans are. Hopefully, there is no bad decision unless there is no plan. Create, collaborate, commit with confidence. Commit with what? Commit with what? And everything that you do.
Noah Dingley here, producer of The James Cooley Show, It's Your Life. And the new audio version of James' book, Country Boy, City Boy, A Journey That Ain't Over Yet, is a must-have. James shares his true life story of struggle and success in America. It's both a cautionary tale and a roadmap to achieving the American dream. Get the new audio version of Country Boy, City Boy, A Journey That Ain't Over Yet by James Cooley on Amazon.com or wherever audiobooks are sold.
The James Cooley Show. It's your life. That's right.
Hello, welcome back to the James Cooley Show. It's Your Life, and I got my great friend, also my financial advisor. Anybody that's looking for a sharp, honest financial advisor, Joshua Goldsmith is that guy.
Thank you, JC. I appreciate that.
Hey,
by the way, I want to say my condolences. You lost your doggy yesterday. You had to put your dog down, and I know how much you loved your 16-year-old dog, Bella, and I'm really sorry about that.
Yeah, that's a tough one right here, Josh. I almost wasn't able to do this show, but we getting through it. Chatting with you, my friend, and the advice that you're putting out to the world, that helps out tremendously. So I really appreciate that, man. I appreciate our friendship. I appreciate everything.
Likewise.
So Josh, is it ever appropriate to make portfolio changes during the market stress?
Yes, it is appropriate, especially when you have life changes, when market changes are going on. Has to be, you should be invested according to how your life is going, right? If you're going through some sort of divorce, or there's some kind of death in the family, or some other type of life event that happens, we've got to adjust the portfolio. Let's say you become unemployed. Is it really appropriate to be taking the same amount of risk? Let's consider how long you have until retirement, and how you're going to replace that income. What are your liabilities? How much money have you been borrowing, or have you taken out new loans? These are all considerations in how, and that do impact your portfolio.
So, what roles do bonds, dividends, and international exposure play in stability?
Well, that's a pretty loaded question. So, bonds theoretically provide more stability than stocks, right? So if we have a portfolio that's a 75% stock and 25% bond mix, those bonds are going to theoretically be the anchor that when markets are in volatile mode like they have been, those bonds are going to provide an anchor, and then also going to provide interest payments, typically every quarter, so that they can give you some reliable income. International investing is a whole nother type of asset class that should be approached with caution. Although it's actually international stocks have actually been performing pretty well this year in comparison to domestics. So it's kind of come out of its shell for the first time in quite some time. So it's important to have exposure, but again, it has to match up with what you're willing to tolerate and who you are, and what your convictions are. What was the other one in that question that you mentioned? Bonds, internationals, and
Dividends. So I think you hit them all.
okay.
You hit them all on that one. So the investor mindset. Investors have to have the right mindset, and understand that in a changing market, things are going to change, just like you mentioned, up and down, all that. But why do investors often underperform their own portfolio?
Good question. And I don't know if they've done studies on that, but it seems like it would be true. There is a first person emotional link to your portfolio when you're creating it yourself. It's harder to know what the fundamentals are for yourself when you're creating the portfolio for yourself. And have you set up the right objectives when you entered in the positions that you have? So in other words, if I bought stock A at price, let's say $100 per share, and it goes to $200 a share, do you have an exit strategy? Is it just to make as much money as possible and kind of just grab it and with a clenched fist and hold on for dear life? I mean, what are your objectives? If it declines to $75 a share, is there a downside strategy? Is there an exit strategy for, hey, I'm not willing to lose more than 25% of my position, but I want to attain 60% of my position or 100% of my position, and then I'm going to sell it. Tax consequences are a big factor. And I find that when there are gains in a portfolio, they deter. Paying capital gain taxes is a deterrent for investors to realize those gains, to sell the investment, and sometimes can cloud the overall view of why we're investing. So it's important to also listen to your financial professional and other people's, your trusted group of professionals when investing as well.
So, Josh, how can working with an advisor help manage fear and decision making?
Well, I can help you stay focused. Like with tariffs and interest rates, it can cause volatility, but I can enter some discipline into your investing that will weather a lot of these policy storms. There may be more. I'm sure there's going to be more announcements from and more political risk on the horizon here, because it's just the nature of where we're at as a country right now. But working with a professional that has hopefully studied the history of the markets and has seen similar types of market environments can really help.
So we got about 2 minutes left in the show. 3. I got 2 questions to ask. So
okay.
I got to spend at least a minute on each one or less. What are some of the common behavior traps during a bear market?
Common behavior traps. Great question. During a bear market, selling. When you let's say we put up a portfolio for you last year with a 5 to 7 year time horizon, and the market drops 10-20%, and you call your advisor and say, I don't care, everything is out the window, everything we discussed, all those fundamentals, all those goals, I just want to sit in cash because I'm going to be more comfortable. Well, maybe he didn't do the discovery to put you in the right portfolio, or maybe you're just turning into somebody that we don't recognize. But it's important to stick with your goals and check your long-term strategies during market volatility.
So how do successful investors maintain confidence in a long-term plan?
Reviewing that plan on a regular basis, seeing the results of that plan on a shorter term basis. So let's say we're in it now for a year or 2 years or 3 years. 3 years is a great measure. Let's look back at the last 3 years. How did we do? Are we coming in line with what was promised or what we expected of an 8% return? Let's look at that and give that confidence and say, okay, the most recent market pullback, it's jarring. It took back some of the paper profits that we had over the last couple of years. But where do you stand with that? What is your average annual return over the last 10, 15 years? Let's look at that and let's derive some confidence and see how, are you with somebody that's educated and knows where we're going and can reasonably give you an idea of where we're going.
So, Josh, 30 seconds or less, can you give 3 takeaways that you want our viewers and our listeners to get from this great discussion?
Don't panic, number one. It's going to be okay. Remember, the tariffs, and we're in an environment where we have a wolf in sheep's clothing. It's the same sheep, but it looks like a different wolf. Let's unzip like they used to do on Looney Tunes and see, and we're going to see that sheep again. We're going to see that sheep. We're going to be able to recognize it. We're going to get through this. The markets have been around. These companies have been around for a long time. That the underlying investments, and just it's a good time to check in with yourself and make sure that you're holistically being taken care of, mind, body, and soul.
Mind, body, and soul. Hey, Josh, you got to stand in invitation to the show. You already know that.
Thank you
for taking time to come on the show. I'd like to thank Dr. Michelle Cooley for putting together another extraordinary show. I'd like to thank our viewers and our listeners for tuning in Monday through Friday, 2 p.m. Pacific Standard Time, 4 p.m. Central Standard Time, 5 p.m. Eastern Standard Time, and across the world, 186 countries. Thank you. Always dream big, think big, and be big at everything you do. We'll be back. You can check us out on the radio, AM 660, The Answer, Dallas, Sunday at 6 p.m. AM 1170, The Answer in San Diego at 9 p.m. Always dream big, think big, and be big at everything you do. We'll see you Monday, same time, same place. It's your life.